Hello, I'm Peter Hibbert from Insight Training. Welcome to today's session, the latest in the series of short webinars we're recording, looking at topical financial reporting, auditing and company law issues. Today's session is going to focus on audit reports and going concern. Going concern will without doubt be a key issue for many involved in preparing and auditing financial statements throughout 2021. Today's session will focus specifically on the audit report implications where there are issues regarding going concern. Here's the running order. We'll start off with the fundamentals, then look at the requirements of the relevant auditing standard, ISO UK 570 in terms of audit report wording, look at changes coming into play for periods commencing December 15, 2019, when ISO UK 570 is revised, and finish off with a couple of frequently asked questions. Let's start with those fundamentals. This slide summarizes the main audit report sections. The audit report has got a lot longer over the years. It can sometimes extend now to 2 or even 3 pages. What I've highlighted in red on this slide are the 2 sections of the report that change with effect from periods commencing December 15, 2019. So for full 12-month accounting periods, that's going to effectively be 31 December 2020 year ends. The going concern changes we'll cover off here. There are also changes coming into play in relation to the auditor responsibility disclosures, where what the auditor will now need to do is to explain to what extent the auditor was capable of detecting irregularities. That's fundamentally breaches of law and regulations, including fraud. And we're not going to cover that in today's session. Here are the various outcomes in relation to going concern in an audit report. Starting on the left, this I think is the most common one, where you probably would call the standard going concern audit report wording, where the basis of preparation is appropriate, the company is a going concern, and there's no material uncertainty casting significant doubt. And we'll see that with an example shortly. Less common but far more topical in the context of the pandemic is the second scenario, where the basis of preparation is appropriate, so the company is indeed a going concern, but there's a material uncertainty that casts significant doubt on going concern, which is adequately disclosed. Now, in that situation, the audit report will be modified, but as I'm sure many of you will know, and as we'll see, the audit report wording changes to reflect the fact that this material uncertainty exists. The third situation is similar to the previous situation, the second one, but in this scenario, the material uncertainty casting significant doubt on going concern is not adequately disclosed. Now, my experience over the years has been that where there is a disagreement between the auditor and their client regarding disclosure, the auditor makes clear what the disclosure requirements are, and the client then complies to avoid the audit opinion being modified. So I think that's probably one that is not hugely likely to prevail, but I'm conscious that professional bodies are very keen in the current climate to ensure that where there is a going concern issue in a company affected by the pandemic, that the disclosure is adequately detailed and sufficiently granular. So I can certainly anticipate there being some issues where perhaps auditors and their clients disagree in relation to the disclosure requirements at the current time. The fourth situation, where the auditor and the client disagree on the basis of preparation of the financial statements, I think is highly unlikely in practice. Okay, so that's the fundamentals. Let's now move on, if we could, and have a look at the required wording in the audit report in relation to going concern, complying with ISO UK 570. So here's a scenario. Company A is an audit client of your firm with a 31 October 2020 year end. Larger portion of income has been lost due to the pandemic, but it's got a very rich director who's provided a letter of support, which means the company is still a going concern. Now, towards the end of today's session, we'll think about the extent to which an auditor can place reliance on a letter of support. But let's assume for the purpose of the example here that the auditor can, and because this letter exists, they and the directors both conclude that A, the company is a going concern, and B, there's no material uncertainty casting significant doubt. Now, in that situation, this of course has been the case since about 2016, this will be the audit report wording, what I referred to a few minutes ago as the standard wording. Now, for some people, not massively helpful in that you've kind of got a bit of a double negative going on here. We've got nothing to report, negative, in respect of the direct use of going concern basis being not appropriate, negative, and the directors not having disclosed in the accounts material uncertainties casting significant doubt on going concern, negative. But that all turns into a positive, and like this wording or Audit, that of course is the wording we see time and time again, where everything's fine from a going concern point of view, which we're saying in this example, in the first instance at least, we're going to assume is very much the case. So a couple of follow-up questions in relation to that. So one question we're getting asked a lot recently is, should we be putting some standard wording about COVID in the audit report, even in a situation whereby we conclude there's no material uncertainty casting significant doubt? And that is certainly a possibility. Maybe wording which articulates the fact that the firm has considered COVID, and from a going concern point of view, there's nothing to report in relation to it. But perhaps going on to say that, that being said, there are no guarantees, and in a very uncertain world, the auditor can't be unequivocally sure that the company will be around for a long time to come. Some firms do include this standard wording, as they were probably a couple of years ago in relation to Brexit. And I think because those firms tend to be the bigger firms, and those wordings probably therefore are generally available to all to see. Some firms, you know, a bit lower down the food chain, as it were, do look to follow suit and incorporate similar sort of wording. We, to a greater extent, probably discourage it and say, stick to the standards. But as long as the wording is appropriate in the circumstances, and as long as it's appropriately tailored, then standard additional wording is not a problem, and is very much allowed. In the situation we looked at, scenario A, would the letter of support require disclosure? Would there need to be a disclosure in the accounts explaining the letter of support existed? Now, paragraph 3.9 of FRS 102 deals with disclosure in relation to material uncertainty regarding going concern, and says that that should be explained and disclosed. What we said in the context of Company A was that there was no material uncertainty. So I think in essence, and per the FRS rules, there's no requirement as such to disclose the fact that the letter of support exists. What I'm minded to just make reference to here, though, is of course the fact that accounts do need to be true and fair. And if the reader of the account is not getting a full and fair view, because that letter of support and its existence are not being disclosed, then that, from an audit point of view, would be a problem. So do think true and fair over and above the fairly minimal requirements for disclosure imposed by FRS 102 itself. And I'm mindful that ICA UK 570 paragraph 20, which you'll see on the following slide, really does reinforce this point. And there it is. If events or conditions that have been identified, that may cast significant doubt on the entity's ability to continue as a going concern, but based on the audit evidence obtained, the auditor concludes that no material uncertainty relating to going concern exists, the auditor shall still evaluate whether, in view of the requirements of the applicable framework, the financial statements provide appropriate disclosure about these events or conditions. So what we're saying is, yes, there's no material uncertainty casting significant doubts, but if to inform a true and fair view, some additional disclosure is required, then from an audit point of view, do ensure that it is very much in there. And that, I would suggest, could very much be the case in the context of the explanation of the support letter that we saw there a second ago within scenario A. Here's scenario B, audit clients, similar to Company A, you and the directors of the opinion that the pandemic has resulted in a material uncertainty with cash significant doubt on going concern, and no support letter in this situation to make the problem go away. Now, in that scenario, we swap the standard going concern wording for this, prefaced by the heading material uncertainty related to going concern, where all you quite simply do is flag up the problem in the relevant note to the accounts, and then go on to say that your opinion is not modified in this respect. And that, I think, is a wording we're going to see a lot of in the course of 2021 for companies that have struggled in the current climate. It's not wording that clients necessarily will want to go in there, but that's the requirement, fairly long established, and certainly as far as scenario B is concerned, that I would suggest is the way that we would go. Okay, so that's the requirements in relation to ISO UK 570. I mentioned that the standard is changing with effect from periods commencing 15 December 2019. Now, the standard changes in a number of ways. What I'm going to really drill down on here, though, is specifically the implication in relation to audit report wording and revisiting scenario A and scenario B, just to make clear how the audit report wording in relation to going concern would look now compared to the previous version based on the changes that are being brought in. Now, scenario A, you remember we were concluding there was no issue with going concern, there was no material uncertainty casting significant doubt on going concern, and if that were the case, this would now be the wording. We talked, didn't we, about the fact that the wording under the previous standard version was very much all about, if you like, double negatives. What we're now doing is making a much more positive statement in respect, I suppose, of a couple of points. First of all, making a very clear statement that we, the auditor, concluded that the basis of preparation is appropriate, and we, the auditor, concluded there are no material uncertainties casting significant doubt. So those two statements will initiate this particular section under the revised version of ISO 570. And we then go on towards the end of the section just to articulate the fact that the responsibility of the auditor and responsibility of the directors vis-a-vis going concern, they're all covered off in the relevant sections of the report. Some people feel that this new, clearer, more positive wording, I should say, may possibly give audit partners more cause for concern, may give them more sleepless nights. I personally think that it's not changing anything particularly here, and as long as the audit is being done in an appropriate way, it'll be this is a straightforward sign off on this basis as it was on the old basis, but that's the wording you're going to see coming in certainly off the back of the new changes. One point of detail, if you are auditing a public interest entity or a listed entity, when you are commenting on material uncertainty in the second section of the going concern section, you'll need to explain what work you've done to inform that conclusion. But from an ordinary SME audit and ordinary charity audit, that will be the word you're going to see time after time based on the updated version of ISO 570. Now, the guidance for the wording under the previous ISO version was very much in the appendix to the ISO itself. There were some examples embedded there, and also some very useful ICAW help sheets on audit report wording, which were very useful indeed. In terms of the revised version of 570, the ICAW help sheet has not yet been updated, and the examples I'm talking about here are embedded within a new FRC audit report bulletin, more than in the appendix to ISO 570. But it's all available for free on the FRC website, and that will give you the wording you've got there on the slide for scenario A. Scenario B, we said there was a material uncertainty casting significant doubt, and again, the FRC bulletin here, it's an example 4 in the bulletin, in fact, talks about 3 segments within the material uncertainty paragraph in this situation. The first segment in red, you'll remember, is exactly the same wording that we had in the previous version of scenario B, where we quite simply signpost or flag the relevant accounting disclosure about the uncertainty, going on to say that our opinion is not modified. We then, and you've got it in green here, unequivocally conclude the basis of preparation is appropriate, as we did in the first segment in the scenario A revisited example. And then again, also as in the scenario A revisited example, we finish off by signposting the relevant audit report sections where our responsibilities and those of the directors vis-a-vis going concern are described in a bit more detail. Again, all in the bulletin, and let's keep our eyes peeled for updated ICAW guides to embrace this in the early part of 2021. Okay, let's finish off with a couple of frequently asked questions in this area. The first one is, because of the Simon Carves case, letters of support are a no-go area, right? Now, many of you, I'm sure, will have heard of the Simon Carves case. It was a case going back a number of years now, where a company went into liquidation, Simon Carves Limited, and creditors of the company went after the liquidators for monies owed on the basis of reference being made to a letter of support in the notes of the accounts. What they were saying was that given that this particular company had reference made in the notes of the account to support from its parent entity over a number of years, that they felt was effectively some sort of guarantee. And therefore, when the company did indeed go into liquidation, they felt the time was right then for the parent company to put its hand in its pocket and pay across the money owed to them as otherwise unsecured creditors based on the fact that the letter of support had been referred to. And what the actual judgment was in the Simon Carr's case was that letter of support prepared as part of audit finalisation and financial statements preparation was in no way, shape or form a guarantee at all. And the case was thrown out. So I think the learning from the Simon Carr's case over a number of years has been that these letters are in no way, shape or form a golden bullet, which automatically means from an audit point of view, there's no requirement to put any reference at all into the audit report in relation to material uncertainty casting significant doubt. You've got to be very careful and very mindful of whether the individual or entity providing that support has A, got the means to do so, and B, is likely to do so, because letters of support to a degree, as far as the courts were concerned, weren't worth the paper they were written on. So I think it's being mindful of that. I would certainly say that there is certainly a potential scope to place some reliance on letters of support, but as you can imagine, in the current climate, it's going to become a really important and very sticky issue. And I think certainly going into 2021, when from an audit file review point of view, we see that a firm is ducking referring to a material uncertainty in the audit report off the back of a support letter being there, we'll be very keen to challenge and make sure the firm has got comfortable around means and likelihood of support before playing that card. And again, quite interestingly, the ICW Audit and Assurance faculty have issued some really great guidance in the later part of 2020, really emphasising this point and probably honing in on some of the key things you'd look at from an audit point of view before you do look to place reliance on letters of support in the way that you might. Just as I was supposed to flag a couple of points which the guidance picks up on. So it's talking about the fact that if you maybe are a parent entity and you're providing a letter of support for a number of individual subsidiaries in a group, how realistic is it that a parent entity can provide that support to all of the entities all at the same time? So in terms of means, think about the bigger picture of different entities rather than focusing perhaps in too much on the individual entity that you're auditing. And again, in terms of means, it talks about things like if you are going to rely on a letter of support provided by a parent entity, yes, the latest audited accounts of that parent entity might provide some indication of balance sheet strength, but those audited accounts might be months out of date. Equally, if you're going to base your conclusion on a letter of support provided by a wealthy individual, as we saw in that scenario a little bit earlier on, it may well be that some desktop research gives you comfort around the source of wealth of the individual concerned, but how can you possibly understand what their actual liability position is? So in a way, placing reliance on letter of support provided by an individual is going to be less likely in the current climate based on the lack of information available than it might be in a situation where that support is provided by a corporate entity. So be mindful that from an audit file review point of view, it's going to be a very key topic for 2021. If you are a chartered accountant and a member of the audit faculty, do have a good look at the help sheet. Lots of good practical advice about the key considerations there in situations where you would be looking to place reliance on such a letter of support. Final one, which again we're getting quite a lot of. Here's the scenario: our client's a hotel and a large portion of its income is generated from weddings which have been cancelled. Accurate forecasting is impossible, so presumably what we're going to do is to qualify or modify our audit opinion. I think the idea with this one is you provide a limitation of scope qualification, effectively a disclaimer on the basis that you don't really know whether the entity is a going concern or not. I think my take on that situation is, have you received all the information that management could reasonably expect to generate to inform their conclusion and your conclusion on going concern? If they've given you all the information you could reasonably expect, my view is that you'll then conclude the company is a going concern, it's not a going concern, or there's a material uncertainty casting significant doubt, and that will in turn inform the detailed audit report, but would not give rise to a modification of your opinion. If, on the other hand, they've not provided all the information you could reasonably expect, then I think you are looking at a modified opinion. And when that's all about lack of information around going concern, the likely modification will, I would suggest, indeed be a disclaimer. So that one, again, I wanted to just go through and talk about what we've been getting quite a lot in recent times on courses. Okay, so that wraps up our short session. We looked at the fundamentals. We went through the ISA UK 570 wording for accounting periods commencing before and after 15 December 19, and wrapped up with some FAQs. Hope you found it useful. If you've got any questions about the content in today's session, do drop us an email at inquiries@insight-training.biz. For more information on our Spring-Summer 2021 programme of courses, do look at our website, insight-training.biz, for more information and booking form. Look forward to speaking to you all soon. Thank you very much for listening. Goodbye.